Hello everyone, Dividend Enjoyer here, and today I'm going to be doing a stock analysis video on Apple Inc., ticker symbol AAPL. I had actually done an Apple stock analysis video on the channel a little while back, and it actually led to me selling out of my Apple position. I sold for an average of $250 a share, which obviously looks much more attractive than the current valuation at $217.90 a share. And doing that analysis really kind of revealed to me that there wasn't enough growth in Apple to justify the bloated valuation compared to something like Amazon, even Microsoft, Meta. It just doesn't have a lot of avenues of growth. But I do have to say that the reason I initially bought into Apple was I believed it was an extremely strong business. And now that the valuation has kind of come down a little bit and the average stock price is down pretty significantly from when I had initially sold, I think that it's worth looking back at. And also with the new earnings, I think it's even more worth looking back at the stock. But I do think that Apple does still have the underlying problem that I talked about in my original video, in that it's going to be very difficult for Apple to continue to drive sources of growth because I feel like they're really behind the ball on AI and they're not innovating in the same ways. I do have to say that with AI advancements and with technology advancements, if any of those things end up on the App Store, I think that that's going to help Apple considerably. I know that they're trying to introduce their products into more emerging markets and grow their market share there, but I feel like Apple's in the same kind of situation as something like McDonald's, where the stock is very much hurt by the amount of success it has because they've really sold iPhones pretty much everywhere they can sell them, in the same way that McDonald's has McDonald's stores pretty much every conceivable place that they could put them. You see that also with Coca-Cola. It's an amazing product. It's not a seasonal drink. People drink it all around the world every single day, but that does kind of become a problem as an investor because there really isn't anywhere else on this planet that you could introduce Coca-Cola to and sell it to other than maybe North Korea, but obviously that would have problems of its own. But talking about Apple, I think it's an amazing business. And I think that they have a lot of unique advantages that a lot of other businesses don't really have. So I think that there is a premium that you can place on that. This company is worth more than some companies' GDP of their entire countries. I didn't mean to say companies. I apologize. But this company is amazing. I mean, it's made more millionaires than most other companies have. I mean, it's in the top 5 still for market cap. It's a hugely influential company, and it really is amazing of a company that a lot of people don't give it enough credit for. And I thought it would be interesting to look at it, give my opinion on what I think Apple is going to be doing or what it needs to be doing, and then do a DCF model valuation on the company based on its past performance so that we can get a close fair value for the stock and make a determination on whether this is a buy, a sell, or a hold. So moving on from that, I just want to say that, again, I think Apple is great. I think that they have a very monopolistic type of company, and they really drag people into their ecosystem and get them to stay because Apple is all about the user interface. And I don't know if you guys know what I'm talking about specifically, but Apple makes it very easy to be able to do some of the things that you want to do, if that makes sense. So it's very easy on an Apple device to be able to send messages, to edit things, and all of the products sync a lot better than, let's say, an Android phone compared to a PC that's running on a Microsoft OS or something like that. If you have a MacBook and then you have an iPhone and you link those two things together, you can more easily send messages through the MacBook. You can send files easier. You can do a lot of different things, whether it's productivity or creativity or a number of different things that are very specialized on the Apple ecosystem that you don't get to do if you have a PC compared to an Android phone. For me personally, the MacBook was great for when I was in college just because it made all of my homework and all of my different assignments much easier, and it made everything it's almost like a lot of the coursework is built around that type of stuff. And Apple knows this, and that's why they donate so much equipment to different schools and things like that, because they really want to get people hooked on their specific product and being able to use their UI and being familiar with that UI instead of a PC, which can do a lot more things and has a lot more options, but is a little bit more difficult to navigate, if that makes sense. And now that that tangent's over, I think that we can talk about the actual stock performance. So over the past year, Apple is up 27.07%. Its market cap is currently 3.28 trillion, which is still extremely high in my opinion. Its price to earnings ratio is 34.64, and its annual dividend yield is 0.46%. It is a 52-week low of $164.08 and a 52-week high of $260.09. Currently, analysts are pretty much split between buy, strong buy, and hold, with 7 analysts out of the 45 rating it a strong buy, 21 rating it a buy, 14 analysts rating it a hold, and the rest rating it an underperform or a sell. The analyst price targets range anywhere between $197 and $325, with an average analyst price target of $252.59. Now, it makes sense that Apple has these higher buy and strong buy recommendations from analysts because previously the stock was just going crazy and it has dropped a considerable amount. Now, this could also be due to the tariffs, which are probably going to affect their supply chain because they do a lot of business in China. As you know, it's cheaper to assemble and manufacture the phones in China and then send them back here. And there is also a lot of political uncertainty on what this administration is going to do to bring that manufacturing back or perhaps punish Apple because they are one of the biggest targets. And we've seen that with Google with all of the antitrust difficulties they've had. And a lot of the other Mag 7 stocks are also very afraid of the government coming in and really hurting their company. And this is a huge possibility and a huge risk with owning Apple. It doesn't seem like there's going to be anything from this administration, but it's also very uncertain about what's going to happen with an all across the board type of tariff that could really hurt their business because they do a lot of business in China. And I also want to say that the underlying reason why I initially sold Apple, this was before the presidential elections actually even happened, but the reason that I sold out of Apple was I was looking at a lot of the other companies like Amazon, Microsoft, Meta, a lot of the other Mag 7 or just very large cap companies, and a lot of them are a lot better at taking their net income or their retained earnings and investing them into new high growth opportunities. And if you look at Apple, they don't have cloud computing. They don't really have an advanced AI. They're very good at what they do in terms of hardware and their app store and things like that are already existing cash cows, but they haven't really had a successful venture that's made them a lot more money other than the accessory market. But you could still argue that that's not new anymore. So for me as an investor, I want to see Apple innovate and make a new segment of their business that has a lot of growth. And it's very troubling for me with such a high valuation and such high expectations that they don't really have a brand new standalone product or service that they've introduced that is really taking off and leading to a lot of growth. And I think that that's really troublesome when you consider the fact that Amazon is involved in all these different businesses. I mean, they even own Whole Foods at this point because it's very synergistic with their current business model. I think that that's the big problem that I'm seeing as an investor and why I'm kind of very hesitant to commit my capital to this company because I think that the expectations are very high and that's what's priced in still. And when that's priced in, you have to look at it very critically and determine whether they can meet these expectations or whether they're going to flounder. And now I think we can transition into the DCF model valuation, but I just want you to really think about what new high growth prospects Apple really has that can drive this inflated valuation, despite the fact that I'm not arguing. I think they're one of the best companies in the entire world. at what they do, and they make a lot of cash flow and a lot of revenue, but I'm just not seeing that number moving up at a rate that justifies this valuation that we're seeing here. Looking at the DCF model valuation, I've come up with a weighted average cost of capital of 7.26%. We can see here that their total debt is only 3.16% compared to the market cap. And this is really expected for a very mature, strong, amazing company like Apple is. The financing is just top tier. There's basically no debt financing really at all compared to the market cap of the company. Apple is just an amazing company in terms of their financing and everything else. So there's not a lot of having to stay up at night worrying that they're not going to have the cash flow or the cash on hand to sustain their business. Obviously, they've been dominant for a very long time, and it shows with the weighted average cost of capital and the debt and equity ratio. Now, with that being said, with the risk-free rate being as high as it does greatly inflate the weighted average cost of capital along with the beta of the stock here. And we could see that our cost of equity is 7.494%, and the cost of debt after tax is actually 0% because they haven't had an interest expense. And I suspect that the debt on their balance sheet is in some way an accounting trick or something of that sort, because they haven't had an interest expense in 2 years, and that's pretty common for these giant companies that essentially have almost no debt compared to their amount of equity. But regardless, with that weighting, it does drag the weighted average cost of capital down just a small bit from that 7.494% number to a 7.26% number. And now plugging that into our DCF model valuation, we can see that they're going to have a 9% average annual growth rate of the free cash flow to be at about fair value. And I don't think that that's very realistic, because if we look here at the past couple of free cash flow years, including the trailing 12-month number, which I've actually not used in this model, I've used the average free cash flow that we have from all of these years, which is higher. We can see that the average free cash flow growth rate is 2.21%, and this is actually very close to the average revenue growth rate per year of 2.06%. And there are some outliers in the revenue, like from 2021 to 2022, we had a 7.79% growth of the revenue, but it's basically hovered around -2 to 2% since 2023, and we can see that reflected here in the revenue. There's not a lot of growth to be had for Apple, and the reason is that they're not investing into more risky things that could lead to more growth, and they don't have something big that continues to grow like Amazon has with AWS or their streaming services or all of the other services that they are providing on top of the cash cow business of the logistics network that they have. Apple has the smartphone, which is bringing in a ludicrous amount of cash flow, but that cash flow is not increasing, and the valuation doesn't make sense compared to the amount of growth that is needed. I do think that you could have the thesis that AI is going to directly benefit Apple in a third-party sort of way. And what I mean by that is that if someone else introduces an amazing AI that they want to get out to people on mobile, Apple is going to be collecting 30% of that because that's what the App Store charges. So I do think that Apple is going to disproportionately benefit from AI a lot more than other companies, even though they're not necessarily having to develop that AI. But I think that this is a major opportunity that they're missing out on because they have the talent in their company. They have the ability to develop something great that could lead to amazing growth. And they also have the App Store, which is very monopolistic, and they could release their AI as the staple AI that is the only AI that they're allowing people to use on their platform. Now, obviously, that could raise some kind of antitrust problems or different things because it's not really competitive. But we also don't really know for sure what Apple is developing, but they haven't really had a hit product since the AirPods, and that's troublesome as an investor. there's nothing wrong with that. There's nothing wrong with being a mature company. There's nothing wrong with making the amount of money that Apple makes on a consistent basis. But there is something wrong with that when you have to have a 9% growth rate on average over the next 9 years of the free cash flow to be close to the fair value that the stock is trading at. And your average free cash flow growth rate is only 2.21%, and your average revenue growth is only 2.06%. So I think that Apple really needs to figure this out and get it going better, because a lot of their competitors are doing the right things. They are investing and taking the risks to get the growth, because ultimately, if you have to justify this valuation, you need to have some kind of segments that are growing and are making more money. And Microsoft has that with their Xbox, their Azure. They have Copilot, which I don't think is going to necessarily pan out. But Microsoft invests in a lot of just really weird things. If you remember the Zune, that was supposed to compete with Apple's iPhone, and it never did. Amazon does the same thing. They invest a lot of money in a lot of weird things that a lot of them don't pan out and a lot of them don't work out. Some of them end up losing the money. But ultimately, my opinion is that if you have this insane cash flow and this insane amount of money, I would rather the companies that I invest in try and stretch that dollar out by making smart, synergistic investments that are going to continue to grow the amount of money that they're producing at the risk of losing that initial investment. And Apple doesn't seem like they're doing that for me, but I could be totally wrong. And if we plug different growth rates in here, let's say that they grow at that average revenue rate that they've had each year, you can see that the stock would only be worth $132 per share, which I think that you have to have some kind of premium for the amount of power and the monopolistic just amazingness of this company. I mean, there's not really a lot of words that I can put that would justify how great of a company Apple is, how great of a company Amazon is, and Microsoft. And obviously I'm comparing them to each other because they are such amazing companies. But Apple really needs to have some kind of growth to be able to justify this valuation. And I think that you should not be investing in this because pretty much all of tech's down. And my personal thesis is that there are better buys out there, and Apple is going to be very reliable, very steady, going to be very strong in what they know how to do. And there probably will be some new developments that they come out with that only they could do. But I don't want to be just betting on that. I want to be betting on the companies that I'm seeing the results and I can bet in the future are going to have higher amounts of growth than what Apple has right now for the price. Now, if Apple was trading at about 150, 140, I would probably be going all in on it. I think that the company is amazing, and there is still going to be some solid growth despite the fears about the tariffs and everything else in the long term. But I think that you have to be very strategic and buying this company when it makes sense to you, and it doesn't make sense to me. So let me know what you guys think in the comments section down below. I'm really interested to hear your take on this Apple stock analysis video. I think I've pretty much covered everything I could think of about Apple, and I've come to the conclusion that I don't want to add this to my own portfolio. Leave a like if you like the video, dislike if you dislike the video, and please hit the subscribe button because I really appreciate it. Thank you.